Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how you can make a profit by trading the upcoming stock market correction to what I believe will be new 2022 lows. Okay, so coming right out of the gates with how to do that. You buy shares or call options on these two ticker symbols right here. Those two being VIXY and uvxy. Okay, these are two ETFs which directly trade the VIX, which is inversely correlated to the S&P 500. Short and sweet, that means that if the S&P 500 goes down in price, the VIX typically goes up in price. Okay, the VIX trades off of perceived volatility, and as we all know, after the Fed meeting today and Jerome Powell's speech, which we will be diving into a bit later in this video pretty darn soon, the markets are going to tank a lot further, and at the time of recording, stock futures are in the dumpster. Okay, so we will be talking price targets on the S&P 500. And just to round out how you can make money, you guys, of course, we will go into more detail here. You can buy, once again, common shares. Better yet, call options. Of course, if you're trading options, always proceed with caution. Only trade what you're willing to lose, especially when it comes to options. Common shares or call options, VIXY, vixi, or uvxy. And if you think the market is going to correct overall, the easiest, most simple ways to play the downside on those, if you don't want to buy these, if you want to short something, is buying put options or shorting the S&P 500 or the SPY ETF and the triple Qs, QQQ, which is an ETF that tracks the NASDAQ 100. This is more tech weighted and typically more volatile. So again, you guys, that is how to make money off of the upcoming market correction, maybe even crash. Things look like they're going to get pretty dicey again. We'll get into the macro right now. But hey, if you guys weren't sure how to profit from the downside prior to this, and you learned something new today, then I'm glad to hear that. But the primary purpose of today's video, you guys, is really to shout out the newsletter portfolio group and really just give some congrats or congratulations are due to Waves Capital, to the existing members of Waves Capital, because today was extremely lucrative for us over at Waves Cap, and I trust the days to come, maybe even months to come, are going to be extremely lucrative as well. There's always a bull market somewhere, you guys. If you've been following the channel for a while, you would know that I love trading growth stocks. I love identifying revolutionary companies and spotting those trends earlier than most and really riding the wave up for future growth for these great companies. Unfortunately, this macroeconomic backdrop is very, very unkind, given some of the stuff we're going to cover today, all right? The Fed Chair Jerome Powell, not happy. The Fed, not happy. And an unhappy Fed is ultimately very, very bad news for the greater market environments, okay? So we will get macro today. I want to read over a few of the macro newsletters. But again, you guys, the purpose of today's video is really just to congratulate, aside from letting you guys know how to make money from market crashes. If you guys are already part of Waves Cap, you would know this. But if you're not yet part of Waves Cap, if you're watching this video for the first time, if you're tuned into my channel for the first time, I should say, if you just learned something new, then stick around. We will be talking about the macro. It's very important to understand what's going on right now. But I shouldn't say the primary purpose of this video. A definite secondary reason I wanted to record this video, though, is to congratulate existing members of Waves Cap, because I think that some of our current positions are going to absolutely print profits over the coming days and weeks. Okay, so if you guys are members, it's okay if you tune out now. You would have, I'm assuming, read over all of this. If you want to read along, if you want to go over it once more with me, that's perfectly fine. Appreciate you sticking around, of course. But congrats to you. Again, it's not easy to make money in a bear market, but if you're disciplined, if you do your due diligence, if you stick to your game plan, it's very possible and, of course, very lucrative as well. Okay, so let me know in the comments down below, you guys, if you're part of Waves Cap, if you are well equipped with put options, with shorts, with hedges, and you're excited for what's to come. Let me know down below. And hey, if there's any new members, new potential members of Waves Capital in the comments, say something nice if you're enjoying the newsletter and portfolio content. Really means a lot. Okay, so we will be talking price targets for the S&P 500 at the end. Not going to get into any more detail, not going to dive into any more charts. Whoa! But I do want to let you guys know what my thoughts are around the S&P 500, because ultimately that is pretty much the benchmark for the US equity markets, okay? And I do think we have, as you guys can tell, I'll explain what this is over here and kind of why these markings are here. But as you can tell, I think that we have significantly more downside to go, and that is looking pretty reinforced, at least at the day of recording. It is Wednesday, the day of the Fed speech, or Jerome Powell's speech, I should say, the day that interest rates were raised by 0.75%. So let's get to reading. You guys, I want to read my Trade Alert newsletter from the 20th, the day before the Fed announced their interest rate increase. I'd want to read my macro newsletter from this morning, reacting to the interest rate increase and also talking about my thoughts around the market's reaction, because we bounced, immediately sold off. But really, we traded through this correctly over waves cap, and this was all really not exactly anticipated, but we were pretty damn close when it comes to properly anticipating how the markets would react to this news of very, very bearish and very hawkish, as the street calls it. Hawkish just means bad. Negative Federal Reserve, okay? And to close it out, I do want to talk about the S&P 500, and I just talk to you guys once again. Give you some timelines on how I see this correction playing itself out, okay? Before we dive into it, you guys, if you do want to check out the portfolio newsletter, of course, we'll shout it out after we actually read through the newsletters. It's the first link down below. It'll bring you to this page, and yeah, you just hit that guy right there. But again, we'll dive into more specifics on this at the end of the video. So let's get to reading now, okay? Surprise, the market sold off. This was the day that the Federal Reserve kicked off their two-day meeting. They're releasing their game plan tomorrow, which is today. Jerome Powell gives his highly anticipated speech after. If there's anyone out there who believes that JP's tone might emit even a sliver of positivity tomorrow, once again, just happened, they're delusional. Inflation continues to rise despite their recent efforts, and the Fed is not happy. No one likes to be perceived as a fool, and the Fed has been looking quite foolish for quite a while now. This leads to overcompensation via action, which leads to greater and lengthier interest rate hikes, which of course leads to a very unhappy market. As I said yesterday, and this is important, and I do feel this, I strongly feel this way, at least until my downside targets, hinted right there, are achieved, okay? Any micro upside in equities is only prolonging the inevitable macro downside. At this point, I think that most investors and institutions understand this, so why not just get this cyclical correction over with? We've been covering the flurry of negative macro fundamentals, but when the S&P 500 broke support last week, last video I made talking about how new lows were incoming, also panning out nicely, we knew the deal was sealed. I trust that you're well equipped with put options and shorts. I'm confident that the profits they're providing us today are just a taste of what's to come. Hold on to that shark mentality, waves cap. Okay, move on. Cut to this morning. Post Jerome Powell's speech. The Federal Reserve just raised interest rates by 75 basis points, which is 0.75%. And in doing so, they expressed their desire to take the higher for longer approach. This method delays the ripping of the Band-Aid, as we've been saying, and this obviously is bad news for the markets. Okay, so when I say ripping of the Band-Aid, it's kind of like what I just said in this one. Like, just get the cyclical correction over with, right? Pretty much every technical analyst out there understands the concept of reversion to the mean. If you guys have been around for a while, you would know damn well what reversion to the means means. Reversion to the means means. It means that to execute a proper and really lock in a full cyclical correction to the downside following a bull market cycle, you need to revisit the prior high, the previous all-time high of the prior leg of the overall bull market. That high would be the one previous to, of course, the COVID sell-off, the Black Swan event in March of 2020, in February of 2020. That would take us to about 340 on the SPY. But again, we'll dive into that after. So let's just rip it off. Every technical analyst out there, and pretty much in this current market environment where there are no positive macro pieces of news, the reality is like this market is ruled by quants, which are quantitative traders, right? It's ruled by technicals because the fundamentals are just non-existent. They're all bad. So Every trader out there, every quant fund out there knows the S&P pretty much needs to revert at some point in time to the February 2020 high before you can even think about a new bull market cycle. So let's just rip off the Band-Aid, get it over with, and revisit those previous highs. And that's pretty much, I mean, really not much TA involved here. It is, again, reversion to the mean. I will talk about this kind of long-term trend line right here and what this 35% correction means, but we'll save that for the end. So as I write this, JP, Jerome Powell, is delivering his speech. He's just stated that his stance hasn't changed at all since Jackson Hole. And as we know, that stance is hawkish. Again, that just means negative in like Wall Street terms. The markets are bouncing back from the sell-off they experienced following the initial news of the rate hike, but personally, I view every move to the upside as nothing but a desperate attempt by market makers to prod a rally. The bulls will get burned. So you know what? Let's take a look. We can go to futures are in the shitter right now. So let's take a look at the SPY over the course of the day, right? I hate how I double click and it zooms in. Sorry about that. So go to the 1 day. You guys can see here. Boom. Markets sold off immediately after the Fed raised interest rates. They spiked to where they were, like to higher levels than they were even at open after Jerome Powell's speech. Ridiculous. But this was to be expected, okay? Only to be, of course, sold off. And in after hours, these things are just getting annihilated, okay? So these announcements shed no new light on this dark macroeconomic backdrop, and there remains little to no bull arguments. If you're not a buyer, you're a seller. Always remember this. Okay, I do want to reference what I just talked about here because we anticipated this. This has happened. Before we get into this, I know I mentioned this somewhere. Right here, over the past 6 months, the markets have rallied following. Oh my God, the markets have rallied following Fed meetings. There we go. We'll just stay there. The markets have rallied following Fed meetings only to encounter extreme sell-offs over the following days. It's likely we see a similar dynamic unfold now. Upon this bounce, I sold all very short-term JP Morgan because banks typically pop upon during Fed announcements. Bought some very, very short-term, very high-risk JPM calls. They popped as the market did. Sold all those. Sold some silver mining calls. Purchased more puts and really traded that beautifully. So as I'm getting ready to send this out, already proven to be a lucrative decision. Today has been a wild one, and I expect more volatility ahead. So stay on your toes. Now let's take a look at some charts. And again, we'll just take a look at the S&P here. Just my take on the S&P. Today we did cover in the Price Targets newsletter, which of course I also write every day as well. S&P, NASDAQ, US dollar, because ultimately the US dollar is dollar up, everything else down. We can take a look at that as well, I guess, just close out the video. But the S&P 500. So we'll take a look at the, we'll just take a look at the Dixie. Boom. My take on the Dixie at the very end of the video, okay? Just a little bonus. But scroll back up here because I'm bouncing around all over the place. Yeah, if you're not a buyer, you're a seller. That's really kind of just what I want to reiterate, you guys. And that's trading. There's a lot of intricacies. There's a lot of things that many traders use that many more traders who are more technical than I am use, and they are effective. And there are many ways that you can be successful as a trader that can get very, very intricate. But if there's no bull arguments to be made, then you probably should be a bear, right? And that's kind of like, we've been talking a lot. We've been getting very specific over the past few weeks. I don't want to reiterate all of our recent points, but you guys, if you're not a bull, you're a bear. If you're not a buyer, you're a seller. And just using common sense right now, it's not rational for investors to be buying right now. And no, I think everyone's finally starting to realize that. Okay, so let's dive into the S&P and then we'll close it out with the Dixie. Well, team, we called the bluff and we called it correct. I hope you kept your eyes on the prize and played that intraday bull trap correctly because our puts absolutely printed in that final hour, and I trust this is only the beginning. We knew a pop was possible, but we also knew it'd be followed up by a sell-off. It came a bit quicker than I anticipated it would. Yeah, I mean, the sell-off came immediately after the initial pop. But again, that's what everyone was expecting. So we played the game theory aspect of the trading day correctly. And that's really what trading is, you guys, especially in such a manic environment where technicals rule. You need that psychological edge, and you have to be one step ahead of your opponent, okay? Today, again, knew that pop would be followed by a sell-off at least in the next trading day or two. So loaded up on more puts, and it paid off a lot sooner than expected, but hey, sooner the better. We knew a pop is possible. Also knew it would be followed by a sell-off. It came quicker than anticipated, sorry, but that's perfectly fine with me once again. On top of that, SPY down, QQ's down, the triple Q's down in after hours, looking super bloody. Let's take a look at futures to close out the video again. That's brutal, you guys. Tomorrow is going to be a bloody day. If you guys are watching this on Thursday, September, 22nd? Where am I going? September 22nd, please let me know what the markets are looking like, okay? So, I'm pumped for the days that lay ahead of us. Cheers in advance, Waves Capital. So again, you guys, this video is, as you can tell, a little all over the place, pretty casual. But again, this is just to let you guys know that there are ways to make a lot of money in a bear market, in a market where most people are losing money. And hey, if you're making money in a market environment, in an economy where the Dixie or the US dollar, which once again we'll look at, is going up, those profits are worth even more. Those profits stretch even further when it comes to your own individual buying power. So, hey, it's a little dark, but it feels even better to make money when the markets are melting, honestly. Okay? So, again, you guys, I think that whether it's tomorrow, whether it's Friday, whether it's sometime next week, whether it's October 1st, whether it's the end of this month, whether it's October 30th, whether it's on Halloween, I don't know. At some point in the not so distant future, I think the SPY will definitely be coming down. Let's get a price range real quick. From current levels, we're at 377 down to, once again, the February 2020 high to complete the reversion to the mean. All right. When do I think this will happen? Again, I just spit out a bunch of random dates, but I actually think this will happen when we intersect with this long-term trend line. Previous resistance will come into play as new support, just kind of a historical trend line for the S&P, and does fall pretty nicely in line with this. So these two intersect. I'll just say right over here. Let's move my fat head quick. Where is that? Right. Well, we'll call it right there. So October 31st on Halloween. It's just having a line right there. Perfect. But if we test this on October 31st, that would lead this long-term trend line on, once again, the overall bull market that is the S&P to intersect with the February 2020 of all-time high, which would take us down to 340. Now, because I'm hearing the number 75% likelihood of a recession landing in 2023, when there are recessionary indicators flashing, which they are right now, the S&P since the year 2000 has averaged a 35% correction. That's the reason that this is here. So again, coming off of the most inflated highs of all time, coming from the most easygoing Fed and most generous Fed of all time, into demand destruction, into a hyper-aggressive Fed, and honestly a Fed that I don't think is even going to, I don't think interest rates are going to tamper inflation just because it's so systemic at this point. It's going to be super ugly, and I do think that a revisit down to, where we were in June 2020, down to 310, which is still above where we were. Keep this in mind, you guys, in 2018, January 30th of 2018, previous all-time high. When you zoom out, it really puts things into perspective, right? In 2018, do you think the economy, do you think the consumer was stronger than they are now? And if so, then it's not all that surprising, given the monetary the Fed really trying to destroy the economy. And of course there is so much there are a lot of monetary policy matters that have happened over the couple of years that do distort this vision or this this theory. But you guys, just to put things into perspective once again, it wouldn't surprise me in the slightest if the SPY came back down to the high 200s and definitely low 300s. Okay, so I do think a 35% correction from the all-time high at the beginning of this year is possible. I do think that a 310 SPY is absolutely possible by year's end, and I hope you guys are prepared. So let's take a quick look at the Dixie. We can just read over my take on the Dixie and the price targets newsletter. We'll just do that to keep it easy. That's a NASDAQ Dixie. Okay. Before we do, though, again, you guys, if you want to join Waves Cap, do it. Join the winning team, you guys. If you want to step up your trading game, if you want a chance to make some money during this market correction, market crash, whatever you want to call it, aside from ways that I just told you, you can absolutely do it in the ways that I explained at the very, very beginning of this video. But more so, if you want to play if you want to be a bit more active, like you can just set it and forget it on some of these if you buy some nice, safe, longer term calls that are in the money already, or puts, I should say. Calls or puts, both ways. Just play it safe if you want to play it long. But if you want to be a little more active, if you want to do your best to optimize profits, again, I'm not encouraging you to copy my trades directly, but learn from my success, learn from my failures, and implement those successes and failures into your own trading strategy. Again, you know exactly what I do, so just keep that in mind. All right, first link down in the description box below. Once again, $15 a month, $40 every 3 months. Try it free for 7 days if you want. You can always unsubscribe, but I trust you'll be sticking around. And if you do, welcome to the winning team in advance, okay? And if not, you're a loss. So let's close out with the Dixie. Dollar just jumped to a new multi-decade high, and technically the rational conclusion is to believe that further short-term upside is ahead. The Dixie peaked out at around $120 following the bursting of the dot-com bubble back in 2000 to 2002. And I don't think these levels are likely, but I do think 117 is definitely possible. Okay, I believe the Dixie will come up to test the top line of resistance on this ascending channel, because you can see here this is Dixie on daily candles. No need to pull it up right here, but Dixie in a very, very clean ascending channel broke to new highs this morning following Jerome Powell's speech, and it's really irrational not to believe that we don't come up and really come up to the top of this very, very obvious, very evident ascending channel and test the top line of resistance. And it's still, even if we test it on 1021, which is where a lot of options contract expire, which is why I have this date set on a lot of my charts personally. Even if we do test it by 1021, which of course, again, higher dollar, stronger dollar, weaker every other asset on the planet that trades against the dollar, which is pretty much everything. So I do think the Dixie's going to break above 115. And of course, as long as the dollar is going up, stock market, silver, gold, crypto, it's all going down. Okay, so make some profits. Personally, I'm excited to make some profits off of the coming downside. Use those profits to establish some positions in companies for the long term that I'm really excited about, and that's the trading game. You guys, it's not as fun to be a bear as it is to be a bull, but your job as a trader is to optimize your profits, feed your family. So I hope you guys do your best to do so, and stay safe out there. Okay. Again, I look forward to seeing you guys in Waves Capital, and if you sign up, I'll talk to you bright and early in the morning, because it should be an amazing rest of the week for us over at Waves Cap. All right, so cheers, you guys. Again, keep up that shark mentality, and I'll catch you guys next time. Until then, always remember, take action, make waves. Peace.